I just got this from somebody. It's a snippet from somebody else's post. I don't really know where it came from. But it says, many of you are familiar with the phrase recoverable depreciation. So when is depreciation non-recoverable? For one thing, if the work is not performed, the client only receives ACV benefits if the damaged property is not replaced. That's true for the most part. Payments are bifurcated. They say how much the replacement cost value of that would be, and then they depreciate that based on age, condition, or broad evidence rule, or fair market value, depends on your state, or how the policy works, or how they determine what that amount is. So they'll pay you the actual cash value of that up until the work is performed and you can show that you've incurred the cost or actually made the repairs. And then they'll pay you that difference of the recoverable depreciation. And that wouldn't be the case if the amount of loss is less than like $2,500 or $5,000 or somewhere like that in the policies. There's usually some provision that says if it's less than this amount, they'll just pay it. But it's usually a small amount. Fencing, carpeting, and contents are always settled on an actual cash value basis per policy language. All right, never make an assumption like that. Don't make assumptions on what is always something in all policies. That's crazy. Policies are wildly different from one to the next. You can't make that assumption that fences are always on an actual cash value basis. I have seen plenty of claims where fences were RCV. Carpeting and contents are always on an actual cash value basis. Carpeting is almost always RCV in my opinion, not ACV. I don't know. Just don't say always about any policy. You need to look at your policy to find that out. Consumers can purchase an endorsement that gives them a replacement cost benefit for contents. Repairs are never depreciated, so they are always paid on an RC basis. That's not true anymore either. That used to be true. Replacement cost value would always be paid for repairs because you weren't really replacing that part of the property. But policies are very different these days. Most policies are written on a component basis and not on a dwelling basis. They used to say we'll repair or replace the damaged dwelling. And now a lot of times they say they will repair or replace the damaged component of the damaged part of the damaged dwelling. See how different that is? They're talking about narrowing down the coverage to very individual items. And so if you're replacing an item, now you're replacing it, and it's not a repair of that item. So unless you were going to go back with substantially the same item, put duct tape on it, glue the thing back together, that kind of a thing, then that's pure labor, and that's why it's not depreciated. But if I'm replacing anything, this has replacement cost value built in. You know what the material and the labor cost is. Until I actually replace it, they would owe the actual cash value of that. So in most policies today, it doesn't apply this way. Now, I may be wrong for some states. I don't know every state. I'm not an attorney. I don't know the case law in every state. There might be states where I'm completely wrong on this. So ask your attorneys in your states. But that was something that was true and doesn't apply to the policies the way that they're written today. Most of them. Most policies state that the work must be performed within 365 days of the date of loss, not when they notify their insurance carrier of the claim. I've seen a lot of policies say that, but a lot of them also say you have 180 days from the date of loss to make repairs in order to recover depreciation. Some of them say you have 1 year from the date of loss. Some of them say you have 2 years from the date of loss. It depends on the policy. Every policy is very different. Don't make an assumption about what's in the policy. If it has a 180-day requirement to make repairs within 180 days of the date of loss in order to receive recoverable depreciation, what happens when it's already past 180 days when you get involved in the claim? Or the storm happened a year ago and you're just now filing a claim on it, but you have 180 days from the date of loss to recover depreciation? Well, if you are in a state where that would be applied very strictly, then you're out of luck. It's going to be ACV only unless you file a claim within 180 days. For most states, though, the courts have applied that to be when you file the claim, you have 180 days. But the policy doesn't say that, so you can't make that assumption. So if you are filing a claim and you already have surpassed the amount of time necessary to recover depreciation, the immediate step that you should do is request an extension with an explanation of why you need that extension. And it just needs to be a reasonable request. We just discovered that the damage is there. We'll be happy to make repairs within 180 days of the date that we filed the claim. Can you please give an extension of that amount of time? we need to be able to show you the damaged property. The policyholder still has to be able to provide evidence. And if they make repairs immediately, then the evidence disappears. So you have to provide the evidence. You have to show them what was damaged. So they have to come out and they have to do their own investigation. And so there's going to be time involved. And so their time commitment is going to eat into the amount of time you have to make repairs, which means it's reasonable for you to ask for more time. Just have a good reason as to why you need that and make that kind of a request. Property policies generally allow for a 180-day extension to perform the work and still recover the holdback, provided the consumer makes a request for the extension in writing. I don't think that's in the policies. That might be part of the guidelines of carriers. I have also seen most of the policies that have some kind of language to say you have 180 days to recover depreciation after they specify that you can make claim for the actual cash value benefits only. And then if you want to make claim for the RCV benefits, then you must make claim for that within this period of time. You must notify us within this period of time that you're going to request that and then make repairs within this amount of time. And so if you are filing a claim for RCV benefits from the very beginning, whether you've made repairs or not, then you've never made a claim only for ACV benefits, and that part of the policy wouldn't get triggered anyway. If you live in a state where you know that the case law is different or it's applied differently because of statutes, put in the commentary how your state would apply this kind of a thing. Or if you've seen some language in a policy that's completely different from everything that I just said, put that in the commentary too. We can help everybody else out with this at the same time. All right? I hope that helps, guys.